Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now, here is your host, Michael Fleming.
Hi, everyone. Mike Fleming, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everybody's favorite topic, which is, of course, sales tax. Today, my co-host, Ellie Moffat, is going to be interviewing me about the Pennsylvania Voluntary Compliance Program. But before we get started, let's introduce you to Ellie.
Hey, everyone. Great to be here. Mike, great to be on the podcast with you today. Before I jump in here on all these questions I have for you, I want to do a quick introduction for Sales Tax and More. So Sales Tax and More is a full service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling your state tax and related needs. So we do a lot of sales tax returns, sales tax registrations, audits, consulting, research, and like our name states, more. So if you have questions about our services or you'd like to work with us, please reach out and ask. We will give you plenty of ways to do so. We would love to hear from you. So Mike, I'm going to jump right in here and start grilling you about this voluntary compliance program. So a lot of sellers have been getting letters from Pennsylvania indicating that the sellers have nexus in PA due to inventory and that they should take advantage of the special voluntary compliance program. Can you explain why Pennsylvania is sending these letters?
Sure, Ellie. Pennsylvania, like the majority of states out there, believes that when you have inventory in their state, when you own that inventory, that this creates enough of a linker connection, we call this linker connection nexus, where they can then require you to collect their sales tax or pay their income tax. So if you have inventory in Pennsylvania, they believe that you should have been collecting their sales tax. You should have been paying their income tax. So they're using the carrot and the stick method, and they've done this quite often in the past. They're offering the carrot and saying, hey, we've got this great program. It's really going to work well for you. And you need to pay 2 years worth of back tax, sales tax. You need to pay 2 years of income tax, and then pay both taxes or collect and pay the tax going forward. And we're going to waive everything prior to January 1st of 2019. That's the carrot. The stick is they're saying, if you don't take advantage of this program, we know who you are and we're coming after you. And, if you're an Amazon seller, the first Amazon warehouse opened back in 2010, they could be coming after you going all the way back to 2010. So, 2 years is a heck of a lot better than, 10 years or 12 years, 11 years. Can't do math today. So that's why they're sending this letter. This letter is the carrot. They want you to pay their income taxes on a going forward basis, collect their sales taxes on a going forward basis if you have a responsibility to do so. And they're reminding you that, inventory in their state does create nexus. So they're being serious about this. And then historically, if you don't take advantage of their carrots, they come out with a big stick and they make examples of people. They add extra penalties and interest on there because they said, hey, we were a nice guy. You didn't listen to us. You didn't believe us. We warned you we were coming. And that's why these letters are going out. This is part of the carrot right now.
So, Mike, I'm glad that you brought up Amazon because a number of the sellers that received these letters are FBA sellers, fulfillment by Amazon sellers, and Amazon has been collecting tax in Pennsylvania since April of 2018. So why are they getting this letter?
Well, a couple things, Ellie. Number one, while Amazon is collecting and remitting the sales tax, they are not paying the income tax. The income tax comes out of the seller's pockets. So Pennsylvania is telling you that we want the income tax from everybody who should be paying the income tax. And Amazon sellers if they've got inventory in Pennsylvania, are subject to the income tax. So that's number one. Number two is that even though Amazon is collecting and remitting the tax, the inventory in the Pennsylvania warehouses still creates nexus. So if you're selling on Shopify or WooCommerce or BigCommerce or your own website, then Pennsylvania is telling you, even if you're underneath the thresholds, $100,000, pretty big threshold, but you have inventory here, and that's a physical presence. So physical presence is always going to override an economic presence. So therefore, you should be collecting and remitting tax on all of these other platforms. Now, if you're only selling on a marketplace like Amazon or eBay or Etsy or Walmart.com, then you don't have to worry about the sales tax here, but you still have to worry about the income tax.
Okay, so Mike, talking about FBA sellers a little bit more here, they say a lot of them have been saying it's debatable that inventory creates nexus and it's not settled. So do we want to touch base on that quick?
Yeah, and this is an argument that FBA sellers speak about quite often. Unfortunately for them, I believe this is a very well settled area or fairly well settled. The argument that FBA sellers make is that they did not move their inventory into the state that Amazon moved it. Well, none of the states say, hey, you have to have moved your inventory here. They say, if you own inventory in our state. And I don't think there's any question that the FBA sellers still own this inventory. So now, since Amazon began collecting, some states have changed their position on Amazon, on inventory stored in an Amazon warehouse, if that inventory is only used to fulfill Amazon sales. Those states most notably being Arizona, Illinois, and Texas. But the vast majority of states, still believe that inventory in an Amazon warehouse is nexus creating. So number one, if you own inventory, and I don't think there's any argument that these FBA sellers own the inventory, that's the position the states think, fairly well settled. That's been the issue for all companies, not just e-commerce companies, for years. So the second issue is that FBA sellers sometimes want to make the argument that, hey, we shouldn't have had to have paid the tax looking backwards. So, this is like a consignment sale. And in a consignment sale, Amazon is the one making the sale. So therefore, they should be paying the tax. Well, it's pretty much a moot point at this point looking forward, because Amazon's collecting the sales tax almost everywhere now. But if you're making that argument, if you're saying Amazon is like a consignment sale, then you're giving up the nexus argument, because most states say that consigned inventory is nexus creating. So if you want to say that this is a consignment sale, great. But you give up that nexus argument. You can't have your cake and eat it too. You can't say, hey, this is a consignment sale, but our consigned inventory doesn't create nexus. So I think that, at least from a nexus point of view, this is very well settled. I think that, who should have been collecting the tax, that's an argument that, it's a good argument. It should be made. But as far as whether, inventory creates nexus, I think that's, a very well settled issue.
Okay, that I think that sort of makes sense here, but let's also circle back to the income tax. We kind of touched on that a little bit ago, but this appears to be an altogether new issue.
It may seem new, and a lot of FBA sellers like to, anytime they don't hear of something or their local accountant doesn't tell them of something, they like to say this is new and the state's picking on me. But this is an issue that's been around since 1959. And in 1959, we had a U.S. Supreme Court case where the U.S. Supreme Court said, hey, states can pretty much tax, interstate income any way that they want. And this was an income tax case. And of course, I'm paraphrasing here. But the Congress got really upset. And so did companies. And they said, hey, Nexus is so confusing. This is going to send the country into another depression. And back in 1959, we're a lot closer to the Great Depression. So this was a big fear. So Congress moved very quickly and they passed what's called the Interstate Income Act of 1959, or Public Law 86-272. And it really nullified the US Supreme Court's position. And what this public law says is that if your only activity in a state is the sales of tangible personal property. And that's what, FBA sellers do. They sell tangible personal property. And those orders are, approved outside the state, and then they're fulfilled from a point outside the state's not allowed to impose a net income tax. Now, for FBA sellers, most of the sales are fulfilled from a point are approved in a point outside the state. The problem is they're not fulfilled from a point outside the state if there's inventory inside the state. At least some of the sales are going to be fulfilled from a point inside the state. And it's all or nothing protection. You can't say, well, I had, 100 sales fulfilled from inside the state, and I had 500 sales fulfilled from outside the state. It doesn't work that way. It's all or nothing. So this is not new. It's been around since 1959. Now, your local accountant may not have thought about this, but it's been around forever. And by the way, for those of you who are waiting for Congress to step in, I find this pretty amusing. When Congress passed this so quickly, they said that Nexus is so complex and so confusing. This is only a temporary solution. We need to form all sorts of committees and do all sorts of studies before we can come up with a permanent solution. Now, that was 62 years ago. And we still had this temporary, antiquated solution that is about to protect no one, whether you're an FBA seller or not. We'll talk about that in a little bit here. But we may say Congress is a do-nothing Congress the last 4 years or the last 8 years or the last 12 or 20 years. In some areas, they've been a do-nothing Congress forever. And in 1982, the U.S. Supreme Court, after having decided a number of Nexus cases, said to Congress, hey, the ball's in your court here. We've decided on a number of issues. This is really your job to figure this out. So 1959, Congress tells us this is a temporary solution. They're going to be working on this, get us a permanent solution any day now. U.S. Supreme Court in 1992 reminds them that this is their job. 25 years later, Congress has still done nothing, and we have the Wayfair decision. So maybe our great-grandchildren will get some benefits out of what Congress does, but I just can't put my faith in on anything that's going to help any of us in the short term here when it comes to sales tax. Could be wrong, but those are my feelings, and history seems to prove me correct.
All right. So, Mike,
Ellie, I want to say one more thing. Besides
absolutely.
Not being a new issue, it's really being advanced forward now for a couple of reasons. Number one, the states are hurting for cash. I mean, this pandemic has not just hurt, companies and individuals. It's hurt states too. So their coffers are very low. They have all of this, cash that they need to pay out to their citizens, and they've got nowhere to pay it from. So they've got to make up some of this lost revenue. And we've seen California reach out and start pursuing FBA sellers for income tax. Now we see Pennsylvania. There are a number of other states, California with C corporations getting a lot more aggressive, Puerto Rico, Nebraska. So a lot of these states that we've never heard about coming after companies before for income tax, all of a sudden are. And there's a third reason, and it's Wayfair itself. Wayfair is really gutted the protections of Public Law 86272. So if you don't need a physical presence, and a lot of the protections of Public Law 86272 are based on physical presence. If you don't have a physical presence, then you're protected. Well, the Multi-State Tax Commission has come out and rewritten their guidance on what creates nexus. So anything that emails, chats, cookies, all of these things, that we all pretty much do nowadays with our websites, all of that is nexus creating it. It nullifies the protections of Public Law 86272. So not only, are FBA sellers in the state's targets, I think they're going to be the first group because they're low-hanging fruit, but over the next 6 to 18 months, I think all e-commerce sellers are going to start to really experience issues with income tax. So it's all those things, Ellie. It's e-commerce sellers are, in my opinion, in for a rough ride. The new battle for e-commerce sellers is going to be income tax.
Yeah, thank you so much for touching base on that, Mike. And what I want to make sure, we've been talking a lot about Amazon. I want to make sure we touch base on, is this only about Amazon sellers?
No, and I'm sorry to make it sound like it is. It's about anyone who has inventory in Pennsylvania. Now, the reason we've been talking so much about Amazon sellers is because somehow Pennsylvania got on a list of people who have inventory, a list of Amazon sellers who have inventory in Pennsylvania, sort of like California did. So that's why most of these letters are ending up in Amazon sellers' hands. But, if you didn't get a letter, you are not scot-free. I mean, this is about anyone that has inventory in Pennsylvania. So, this program ends on May 8th. You don't want to find out that the state knew about you, but just didn't send you a letter. I mean, state's under no obligation to inform you that they know who you are. They're not under any obligation. So you can play Russian roulette with whether the state knows about you or is going to find you, or you can take advantage of this program.
All right, thank you so much, Mike. So are you recommending that sellers take advantage of this program, and why or why not?
Yeah, I really am, Ellie. Couple of reasons. Number one, this program is very special, and it goes back only to January 1st of 2019. So it's 2 years plus the current year. Now, the state wants their sales tax and income tax, but if you were to do a normal VDA, the look back period is 3 years plus the current year for sales tax. So you're saving a year there, and 5 years plus the current year for income tax. So you're saving 3 years there. So I think that this is, as far as VDAs go, this is a great program. It also waives any penalty or interest, waives any penalty. You still have to pay the interest in that from that period forward from 2019. Anything older than 2019, you don't have to worry about at all. So compared to a normal VDA, I think this is a great program. Now, second reason I think that sellers need to take advantage of this, especially those who got this letter. State's telling you they know who you are. They're saying, hey, take advantage of this program. Now, if you don't take advantage of that program, then the state could go back all the way to 2010 if you're an Amazon seller and have had inventory there. So there is a whole lot of exposure there. And remember this, Amazon started collecting in April of 2018. So if the look back's only to January 1st of 2019, you don't have to worry about the Amazon sales for sales tax whatsoever. But if you don't take care of this program and they go back, 10 years, well, now you got 10 years worth of, or 8 years worth of Amazon sales that you got to worry about. And that's a lot of exposure for a lot of sellers. So that's one of the big reasons. Um, a lot of people that we're talking to say, well, we're going to wait and see about this lawsuit by the Online Merchants Guild. Well, lawsuits take forever if they're filed in the right venue. And, typically you want to file this type of lawsuit in the state courts, not in federal courts. So, my basic feeling is this is going to get thrown out of federal court at some point down the road, and they'll have to start all over again in federal court. And by that point, this program is going to be long over. I mean, even if, it stays in federal court, you're not going to get an answer by May 8th. So this program is going to be long gone. And Pennsylvania is going to be pursuing very aggressively while you're waiting for an answer that may come 2, 3, or even 4 years down the road. So I don't think Congress is stepping in. I don't think this lawsuit's going to be helpful. And Pennsylvania is just telling you, here's what we plan on doing. We're coming after everybody who has inventory in Pennsylvania. And the risk reward is just not there. I mean, they're saying it's just 2 years of tax, and Amazon's not even included in that 2 years. None of the marketplaces, for the most part, will be included in that 2-year period. Maybe eBay, they were a little bit late to the party. But for the most part, it's just going to be your sales through Shopify and websites like that. So when I'm looking at what the risks are versus what the rewards are, there's just too much that says you got to take care of this. But the biggest one is if you got this letter, Pennsylvania's saying, I know who you are. So why in the world are you going to tempt fate? That's just my views, Ellie.
Yeah, thank you so much. I think we covered a lot in there. But Mike, what I want to do right now is I want to go over a quick recap of the program itself. So can you give us a quick recap?
Yeah, absolutely. So the program began on February 8th. It runs through May 8th. So it's 90 days, pretty short program. The look back for both sales and income tax is 1/1/2019. The income tax, depending on what type of entity you are, you really only have 1 year, including the VDA, because the second year may not even be due yet. So it's not that bad, not that onerous. Now, if you've already gotten a letter, you will not be able to take advantage of any VDAs in the future. This is the only shot that you have. Any periods older than 2019, the state is going to say we don't care about. We're going to, not even look at those. For the periods after, the tax that you do pay, whether it be the income tax or the sales tax, they're going to waive the penalty. You still have to pay the interest, still have to pay the back tax. Big one here. This program is only available for sellers who are not registered. If you're already registered, you cannot take advantage of this program.
Thank you, Mike. And if you are like me and a written transcription is easier for you to touch base on that, we do always put our transcriptions in the podcast page of our website, so you can find that there. So Mike, if the program
are you saying I'm confusing to listen to?
I'm saying that for me, it's easier to see it written down. You're not confusing, obviously.
A lot of information we went over today, so we can get lost in the details. So I'm apologize if I'm coming across like a fire hose here.
Yeah, that's how sales tax is so often, and that's why so many people come to us. So, Mike, if the program is only available to sellers who are not registered, though, why are some sellers who are already registered getting these letters?
That's a great question. It's one that I had. We actually contacted the state of Pennsylvania, and their answer, clerical error. So what they've told us is to just provide the sales tax number on that form that they sent out. Don't put any other information on there. Just send it back with that number on it. That's what we're going to be doing for our clients, and see if Pennsylvania holds true to their word. But that's what they told us. It was a clerical error, and when whoever's working on that particular account, when you give them the sales tax number, they see that you have been registered, they should close the case. Now, a lot of people are registered for sales tax, but not for income tax. They haven't told us what they're going to do with that yet, but as far as sales tax is concerned, you should be covered.
Thank you so much, Mike. And this has been a really valuable episode. There's lots of really great information in here. So please share it around with anyone that you think it could help. And if anyone needs help with this program, please reach out, or if you need help with other sales tax services as well. But we'd love to hear from you. We'd love to work with you. So also, Mike, I'm going to add in here, you could reach me directly at emoffat@salestaxandmore.com. That's EMO, F as in Frank, F as in Frank, AT @salestaxandmore.com. You can also visit our website, salestaxandmore.com. And just want to touch here, in addition to our services, we offer an entire series of free webinars that offer CPE credit. We have this podcast. We have lots of blog posts. We have free resources on our website, state tax charts, lots of matrices, and a paid portion of our website as well. So, Mike, anything else you want to add in here?
Yeah, just we appreciate you listening in today, watching us, and we hope to see you on the next episode of the Sales Tax and More podcast. Thanks, everyone. Bye-bye.
Thanks for listening. Be sure to click subscribe and check out all of the resources we have out on the web.